Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a 0.5 percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%.
Knowing that the interest rates are a little bit lower now, it actually helps in some capacities, because now we have the down payment assistance programs, you have banks that want to provide support, yada yada, but then you also have now the interest rate that's also working in your favor. So it actually makes it more pliable.
I think it's important because this is, the first time the Fed has cut rates in quite some time. And they've kept those rates at, the high levels that we've seen for over the past year. And again, this move itself might not be hugely impactful for the economy in the very near term, but it sets us on a path towards lower rates, more accommodative growth, maybe a faster growth rate when you look at the second half of the year next year. And it really helps to maybe shore up the possibility that maybe we can avoid a recession this time around and see a soft landing. And if we see some reduced rates, that will bring more current homeowners to list their homes, get more overall activity, and hopefully boost those parts of the market and just take some pressure off of the costs that many consumers face, as we're going to see lower rates going forward as opposed to the very elevated rates we've had recently.
You forget sometimes about yourself. And so searching for homes in a long-winded response, on top of figuring out where I fit into my nonprofit income, on top of the interest rate, on top of the economy, it does not look so good. But I'm grateful that I have an opportunity now to at least explore it a little bit more.